Hey, you just turned 18. Congrats. You can vote, you can sign a lease, you can get a credit card. But somewhere out there, a mysterious number is quietly following you around. It'll decide if you can rent an apartment, buy a car, or get a loan one day. That number is your credit score. And most people have no idea how it works until it's already working against them. Not you, though. Let's fix that right now. A credit score is a three-digit number between 300 and 850. Think of it like a grade, except instead of measuring how well you know algebra, it measures how reliably you pay back money you borrow. Here's the range. 300 to 579, poor. 580 to 669, fair. 670 to 739, good. 740 to 799, very good. 800 to 850, exceptional. Most lenders, banks, landlords, car dealerships use this number to decide two things. Number one, should we even lend you money? And number two, at what interest rate? The higher your score, the better the deal you get. Simple as that. Your score is calculated using 5 factors. Let's go through each one. Payment history is the biggest one, 35% of your score. This is simple. Do you pay your bills on time? Every time you pay on time, credit card, student loan, car payment, ding, you get points. Every time you're late or miss a payment, that number drops fast. One missed payment can tank your score by 50 to 100 points. It stays on your record for 7 years. The lesson? Pay on time, even if it's just the minimum payment. Second biggest factor, 30%, is credit utilization. This means how much of your available credit are you actually using? Say you have a credit card with a $1,000 limit. If you've spent 900 of it, that's 90% utilization. That looks bad. The golden rule? Keep it under 30%. Under 10% is even better. Think of it like a gas tank. Lenders get nervous when you're running on fumes because it looks like you might be desperate. 15% of your score is just how long you've had credit. The older your accounts, the better. This is why it's smart to open a credit card early, even if you barely use it, and never close your oldest accounts. Time literally builds your score, even while you sleep. 10% of your score looks at what types of credit you have. Credit cards, auto loans, student loans, mortgages, they each count differently. Having a healthy mix signals that you can handle different kinds of debt responsibly. Don't go taking out loans just to get a better mix, though. This factor matters least. It's the bonus round. The last time percent? New credit inquiries. Every time you apply for a new credit card or loan, the lender does what's called a hard inquiry. They check your score. 1 or 2 of these is totally fine, but if you apply for 6 credit cards in a month, lenders think you're desperate for money. Your score takes a small hit each time. So apply for new credit strategically, not frantically. Okay, so you just turned 18 and you have no credit history at all. How do you even start? Here are 4 proven ways. A secured credit card works like this. You deposit, say, $200 as collateral, and that becomes your credit limit. You use it like a normal card, pay it off every month, and boom, you're building credit. In 6 to 12 months, your score can climb from nothing to the 600s or 700s if you're disciplined. Ask a parent or trusted family member to add you as an authorized user on their credit card. You don't even have to use the card. Their good credit history rubs off on you like a hand-me-down. It's one of the fastest ways to build a starter score. Some banks and credit unions offer credit builder loans. You make small monthly payments, and at the end, you get the money back. The whole point is just reporting your on-time payments to the credit bureaus. It's basically a savings account that also teaches you credit discipline. Win-win. If you're in college, student credit cards are specifically designed for people with little or no credit history. They have low limits, and some even give cashback rewards. Use it for small recurring purchases, like Netflix or groceries, and pay it off automatically every month. Set up autopay. Don't think about it. Now let's talk about the stuff that can wreck your score, especially mistakes that young people make without realizing it. Missing payments. Even one missed payment over 30 days late gets reported. Set autopay, period. Maxing out your card. Just because you have a $1,000 limit doesn't mean you should spend $1,000. Stay under $300 on a $1,000 card. Closing old accounts. Closing a credit card actually hurts your score. It lowers your total available credit and can shorten your credit history. Leave old accounts open, even if you don't use them. Co-signing without thinking. If you co-sign a loan for a friend and they stop paying, that's your credit score on the line. Be very careful who you vouch for. Ignoring your credit report. You're entitled to a free credit report every year from annualcreditreport.com. That's the official one. Check it. Errors happen, and they can lower your score unfairly. Here's the big picture.
Your credit score isn't just a random number, it's your financial reputation. And like any reputation, it takes time to build and seconds to damage. The good news? If you're 18, 19, 20, you're starting early. You have time on your side. Start with one secured or student credit card. Pay it in full every month. Keep your balance low. Don't apply for everything at once, and check your report once a year. Do those 5 things consistently, and by your mid-20s, you could have a score that gets you better loan rates, lower insurance premiums, and a landlord who actually calls you back. Your future self will thank you. Credit score explained. You've got this.